Hello, Maverick traders. Welcome out to your currency recap for September 11th, the 22-year anniversary. Time flies, but we all remember that day very well. Let's never forget. So we start with a top-down approach in the markets, talk about what meaningful news hits the markets, and today it's going to be a focus on crypto. We'll take a look at the broad equity markets, we'll look at some currency charts, we'll just analyze a variety of different things, and then some setups as they present themselves. Right now, FX is not doing a whole lot, but crypto has definitely broken out of a big basing pattern. All right, so let's take a look at the markets. As far as velocity is concerned, most everything in the currency land is right around zero. US dollar's been outperforming big picture, Aussie and Kiwi underperforming big picture. Those things have rotated a little bit the last day or two, but here's the news. Ethereum, Bitcoin Cash, Litecoin, Bitcoin, that is where the momentum is, and the momentum, my friends, is on the downside. Now, as we look at today and what was happening, you have the US dollar down about 0.5%. You have the Japanese yen and the Aussie up about 0.5%, but again, not a whole lot happening in terms of those markets. So crypto is where it's at. That fell sharply. You also saw energy come off. Not oil. Oil was flat, but the energy sector in the equity market side really got hit hard. And currencies are just kind of chopping sideways. Doesn't mean you can't find some opportunities, but just pick your spots a little more carefully. Anticipate maybe less follow through because we're in a bit of a choppy environment. So as we said, not too much happening here in FX land. Crypto, the big performer, down 3.5%. Equities were up about 0.5%. Gold and oil, again, flat on the day. If we were highlighting one or two, Ethereum got hit extra hard, down 4%, and both Bitcoin and Ethereum have sort of had some channeling patterns, and we'll look at those charts here in a bit to show you maybe where they're going in the short term, and then probably an area to take profits and expect some sort of bounce is possible right there. So weekly calendar, equity outlook is a 0, and on the expectations for the S&P, there's just not a lot going on. If you look at it closely, we have a mixed picture because the 20's below the 50. That's more bearish. The price action's up above the moving averages. That's more bullish. The moving averages are sloping sideways. That's more neutral. So I can make a bearish, a bullish, and a neutral statement all in the same bunch. What does that tell you? That's a 0 rating. That is a choppy sideways, not bullish, not bearish, just chopping around. Again, the big news this week is going to be on Wednesday, and it's CPI. Now notice, we've gone from 3.2 and we're expected to tick up to 3.6 on the inflation number. This is where inflation gets difficult, and we've now started to see it trend upward. It was easy to fall a few months ago because we had such big numbers on the month-over-month numbers falling off. We had in July of last year, in 2022, for example, you had an over 1% monthly number, and we got rid of that. So naturally, that CPI year over year was going to drop. But here is where it's hard. And at 3.6, that is way above the Fed's target at 2%. So they still don't have that price stability. The Fed's not likely to raise rates next Wednesday. I don't think they are. The market doesn't think they are. But are they going to raise rates the meeting after, maybe the next couple of meetings? I think there's a very good chance of that. So the Fed is not done, probably higher for longer here for a little bit more period of time. We've got PPI on Thursday, retail sales, so some U.S. numbers, ECB press conference on Thursday and such, ECB meeting Thursday morning bright and early. So there's a couple of things out there, but definitely highlighting the CPI comes out 8:30 a.m. Eastern time on Wednesday. Now, possible trades. I'm not seeing a lot in currency that I'm interested in, but Bitcoin has been in this huge base, and we just broke down today. There might be a little bit of price overlap tomorrow. Just it's very common to have a harami, a little candle within that candle, but a move lower seems likely. Now this is Bitcoin. You've got a lot of room down here to the lower channel line, which is quite a bit lower. Ethereum is a little closer, and Ethereum, I went ahead and showed a long-term chart to show you how we had been falling and stalling out at that resistance. Then we broke out above, and now we've been checking back to it on the other side. And I think that's what's happening here is we're going to come down and check and test that trend line. And that channeling line keeps running away from you. So there's still some decent downside, even in Ethereum, which is a little closer to that channel. That seems like the target. That seems like where we're headed. Also, if you look at this long term, look at this huge long-term pattern. Big inverse cup and handle and breakdown. That's a picture perfect inverse cup and handle pattern. So you've got patterns within patterns, downside. The crypto markets are weak and look like they'll be getting weaker still. CPI on Wednesday. ECB meeting on Thursday morning. Continue to play that relative strength and weakness. Use good position sizing. And as always, have fun doing it. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.